Headed in 2022. Joining us now is Jerry Storch, Storch Advisor CEO and former Toys R Us CEO. Jerry, happy holidays. Thanks for being here.
Great to be here.
Listen, I was a Toys R Us kid, so I'm very appreciative of all your work. Let's get down to it. I think you were probably hearing Courtney just talk right now. In-store sales up 8%, e-commerce up 11%. Sounds like an all-around win for retailers. Was this holiday season as good as the numbers make it seem?
I think the season was good. We've been saying all along it was going to be good. The consumers have money, and history shows one thing. When consumers have money, they spend it, and they did. The one caveat I would have to this whole story is that with if you take the MasterCard numbers at their face value, I've been noodling this all day, of 8.5% for November, December combined, we already know, the old data is that November was up high double digits, maybe 16, 17%. So what does that say about December? It probably wasn't up very much. So when we get that data out in January, it may not be as good as people think for December alone. Some of that is sales that were pulled forward into October and November. And some of it was, especially the last week or two leading up to Christmas, we had all this noise about Omicron. And I think some consumers did stay away during that period. I don't think it's a long-term disease for the consumer, if you excuse the pun. I think it's I think it'll be short-lived. If Omicron is short-lived, then I think consumers are coming back. They have the money, they're going to spend it.
Jerry, I have a question for you, and I'm in agreement with a lot of things you're talking about here. What are your thoughts around margins? Are we at peak margins right now? It seems that there's been a catch-up purchases by consumers. Online typically is dilutive for most retailers, and the supply chain disruption made that a lot of people actually purchased a lot of inventory, which is going to have to get unwound. And so maybe it benefits TJX, but how do you think about retailers and margins going into 2022?
Well, I have to tell you, but it depends. I think in apparel, we may be near peak margins. Keep in mind, a lot of retailers didn't buy very much for last holiday season. So a lot of what they had was fresh inventory this year. And if it doesn't sell through, they're going to have to clear it when you get to January, February. So you might see a different picture the next year. Every merchant, when they get into a new position, the first thing they do is mark everything down. And then they look great the first year. The second year, not so good. So in a way, all the apparel retailers, all the department stores may look that way this year, where they have a lot of fresh merchandise coming out of the pandemic. Now, as you get a year later and 2 years later, that stuff gets a little long in the tooth. Meanwhile, there's pressure on margins from supply chain, which some retailers have abated through very expensive means, like chartering ships or air freighting goods. They probably aren't going to have to do that as much next year. Even though I don't think the supply chain's totally fixed, we have quite a while to fix it because we're past peak now. Volumes are down going to January, February, March. There'll be some time to get things under control in supply chain. So I think that will go the other way. Meanwhile, every retailer I know, would be malpractice not to, is raising their prices like mad. And so that will also contribute to their margins going up, not down. And the smartest thing to do if you're a retailer, raise your price in anticipation of your costs. So far, they've been chasing it. They're going to do it the other way now. Everyone's going to raise their prices past where their costs are. So margins will be pushed up by that. So it depends on the category. I watch apparel very, very closely, though.
Jerry, take it easy. Let me do my returns first, then they can raise their prices, if you don't mind. Okay. On a serious note, Courtney has some great data in that last report on the stickiness of e-commerce. She said this holiday season it was just under 21% for the second straight year. Are we going to see declines in e-commerce in the future? And again, hitting Nadine's point, what does that mean for margins? Because obviously e-commerce is a lot more expensive to fulfill, and the returns seem to be really killing retailers.
So not a chance we're going to see a decline in e-commerce. It continues to capture share. Some people thought this was the quarter. Bricks and mortar might get back share. No way, no how. Amazon continues to gobble share. All the bricks and mortar retailers, where they're all channel or omni-channel models, are doing the same thing, shifting their balance towards e-commerce. That's going to keep growing. That's a mega trend. It's not going to change. You're right, though. Depending upon the average ticket, right? So a low average ticket store, e-commerce erodes the margins. A high average ticket store doesn't make much difference. So if you're Saks or Neiman's or someone like that, you're shipping out things that cost $500 and you got a couple $100 in the margin pool. Doesn't matter how you fulfill it. That's irrelevant for the overall margin picture. But if you're Kohl's, for example, it's a pretty expensive way to do business. Selling one piece of low price clothing at a time over the internet with the extreme cost of fulfillment. So there you do degrade your margins. There's no way around it. It's going to happen. Meanwhile, you have to figure out how to fix it. And that involves, having products with higher margin, building the ticket up, building your average price, building the average items per transaction. You have to view that as a new parable or challenge for the ages if you want to be a winner in the future.
All right, Jerry Storch, great insight. We appreciate it. Let's turn back.